if you're a consistent buyer, you'll have bought some close to the bottom of this cycle. I don't know if this cycle is going to last a week, a month, a year. Probably not that long in my view. But we're obviously, if you look at the way the monetary system is going, governments are absolutely out of control. We're seeing some cuts in America, but the tax breaks mean that they've given away far more in tax breaks than they're cutting in spending. So that deficit is going to continue to grow, and it's going to go out of control. So it's only a question of time before the current dip we're going to be seeing in the gold price will turn around and go back up.
The U.S. government's fiscal imbalance continues to widen, with spending reaching $6.75 trillion last fiscal year while generating only $4.92 trillion in revenue, resulting in a staggering $1.8 trillion deficit, according to Treasury data reported by Business Insider. Over the past 2 decades, the national debt has tripled to approximately $36.2 trillion. Bridgewater Associates founder Ray Dalio likened this mounting debt to plaque in the financial system, warning that rising interest payments consume an increasing share of government budgets. Senior analyst Clive Thompson highlights that unchecked government spending and ballooning deficits, particularly in the U.S., drive financial instability. This unsustainable trend is expected to fuel a long-term rise in gold prices, making short-term dips an opportunity for accumulation rather than concern. The current rally in gold reflects these economic anxieties, reinforcing its role as a safe haven asset amid fiscal uncertainty. Thompson notes that gold mining stocks are gaining traction amid rising gold prices, yet they remain undervalued compared to a decade ago. While they've outperformed gold recently, with mining stocks gaining 16% against gold's 8%, individual performances vary. Royal Gold struggled with a breakout, Agnico Gold ended its winning streak, and Kinross Gold pulled back into its buy range. Barrick Gold reclaimed a key level but is still below its buy point and recent highs. The ongoing gold bull market has driven significant gains in mining stocks, with some rising over 140% in the last 12 months. However, the rally's sustainability remains tied to gold prices. Kinross Gold, for instance, has benefited from strong gold prices but may face downside risk if the metal enters a correction phase. Market sentiment suggests that a decline in gold stocks could lead to or follow a broader price pullback. Nonetheless, the long-term outlook for gold and mining stocks remains favorable, with deficits and debt levels escalating. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
They do it, of course, as you said, Mario, during the Weimar inflation, we had many periods when gold was going down, sometimes for a year or more, but it wasn't a straight line, even though in your chart, because it's very compressed, it looks like at times it was a straight line up. And where we are now, we've got the American stock market teetering on the edge. It looks like it's about to plunge. And as the American stock market goes down, of course, everything's going to go down. Bitcoin's going to collapse. The gold price is going to collapse. Stocks are going to collapse. But the trouble with that is those who are nervous Nellies, they'll be selling, but they will be unable to get back in when the tide turns. Because at the bottom, things always look much worse, much more bearish than when you sold on the way down. So I've been investing money for 50 years, and I've seen my clients doing the same thing. I have never yet seen someone who sold because they thought things were going down. They were sometimes right about them going down, but I've never yet seen one of them manage to buy back at a lower price than they sold, even though the opportunity existed sometimes for many years, because when prices were lower, people felt more bearish than they felt at the time they sold, and they cannot make the decision because things look worse. So what I'd like to say to your listeners and viewers, Mario, is yes, gold's going down at the moment, but don't be frightened. Don't allow yourself to be panicked out, because if you do, you'll never end up buying back when it hits rock bottom. You're going to feel far more negative at that moment in time. So we have to ride it through and use this as an opportunity. If you haven't got enough gold, use it as an opportunity, this downward draft in stocks, Bitcoin, gold, and anything else which is falling at the moment. Use it as your opportunity to pick up a little bit more cheaply. And if you're a consistent buyer, you'll have bought some close to the bottom of this cycle. I don't know if this cycle is going to last a week, a month, a year. Probably not that long in my view. But we're obviously, if you look at the way the monetary system is going, governments are absolutely out of control. We're seeing some cuts in America, but the tax breaks mean that they've given away far more in tax breaks than they're cutting in spending. So that deficit is going to continue to grow, and it's going to go out of control. So it's only a question of time before the current dip we're going to be seeing in the gold price will turn around and go back up. And I would say those who think they can sell it now and buy back at the bottom, they'll miss the bottom. Absolutely. They won't buy back. They'll end up buying back at a higher price than today. Statisticians will tell you, and I think they're right, will tell you that the first few weeks of the year tell you what the year is going to do, whether it be in stocks or commodities or interest rates or anything else. So yes, I think we're going to see, we're not going to see an outstanding performance from the stock market this year. And I'm being kind of gentle there. I'm not saying it's going to crash. But I do think it will go lower. I think we're going to have a good year overall from metals. That seems to be the case. But if I could just touch on another thing, Mario, and that's gold mining stocks. Gold mining stocks are still significantly lower in price than they were a decade ago. Over the last 2 years, since the gold rally started, they've just about kept pace with the rise in gold. But since the 1st of January, gold mining stocks have been slightly outpacing gold, about double. So gold's done about 8% or something like that. Gold mining stocks are up about 16%. So we are now in a situation where gold mining stocks are playing catch up, and I think that's something which people should be looking at. So what we'll see, if I give you an example, when the gold price goes up, in general, their sales will rise faster than their costs. So let's say the costs for a gold mining company are rising by 5%, but the sale price is rising by 10. So give you an example. Let's say the gold mining company was mining its gold at a cost of 95 and selling it for 100. So it was making $5 an ounce. The cost of mining the gold has gone up to 100, but the price of selling it has gone up by 10%, and they're selling it for 110. They've doubled their profit. Their profit has gone up by 100%. Now, we're already seeing that in the results which are coming through from gold mining companies. Those which are reporting are generally reporting huge increases in their profits of sometimes more than 100% year on year. And that's based on gold mining prices of up to the 31st of December.
Clive Thompson argues that the LBMA and Bank of England collaborate closely, with bullion banks controlling precious metals through short selling. When investors request physical delivery, this system becomes vulnerable, revealing that the market relies heavily on paper contracts instead of metal. In a research note released Monday, analysts at BCA Research announced they've initiated a tactical short position on silver as a contrarian response to recent tariff threats. While adopting this short-term bearish stance on silver, BCA maintains its bullish outlook on gold despite acknowledging the possibility of a near-term price correction. Silver's comparatively shallower and less liquid market makes it more vulnerable to any near-term price pullback vis-a-vis gold, the analysts explained. They added that any near-term weakness will present an attractive opportunity to increase cyclical and structural exposure to the yellow metal. Let's get back to the interview.
Obviously, I think they look after their own, the LBMA. We're talking about the LBMA and the Bank of England. It's effectively as good as the same thing. The participants in the LBMA, they're the big banks, and they're the good friends. They're all buddies. They all have lunch together and that sort of thing. And if someone was taking delivery, that's very awkward for those who don't have the silver. And we mustn't forget that the bullion banks love to play the short end of the market by selling gold that they haven't got, lending it out, gold and silver, it doesn't matter. That's the game. So when someone takes delivery of what they bought, it's unexpected. So what was going on in 1997, Berkshire Hathaway was taking delivery. Where was he taking delivery? He was taking delivery of the silver he bought on COMEX in New York. He was taking delivery of it in London, right? So, and the reason he was doing that, I'm quite sure, was to maintain some level of secrecy about what was going on. So obviously, at a month before the annual report was due out, when he might have told people that he bought silver, I think he was forced to make a disclosure, which is why they made this press release. And there's some very interesting words in the press release, which I'll just read you a couple of lines of it. And I think this is why he was forced to make why the Bank of England was so worried. These are his words. If any seller, by the way, at the time he had 42.2 million out of the silver that they bought, which was at that time not yet delivered. In other words, they bought on COMEX, its futures, it's being delivered as it matures, but 42.2 million had not yet been delivered. So he said, if any seller should have trouble making timely delivery, Berkshire is willing to defer delivery for a reasonable period upon payment of a modest fee. So here he is, he's giving a sop to the regulator. Don't worry, I'm not going to disrupt your market. If people can't deliver, I won't sue them. I'll give them a delay and they can pay me a small fee. So, but my real point here is that here's the man who's grown up in a world where his father was talking about gold. It was illegal to own gold. He bought the next best thing for himself as a younger man in the late 1960s. Later on, he's been following silver. Berkshire Hathaway buys silver, a lot of it. His best friend and co-owner of Berkshire Hathaway, Charlie Munger, doesn't seem to agree with that purchase, but says, okay, Warren's having fun, it's keeping you out of trouble. But obviously, they had a little bit of an argument about it by the sound of it, if you listen to them on YouTube talking about it. So for the next, from 1997 through to now, Warren Buffett has not been messing around, to my knowledge, with gold or silver. And I know he's quite right. Gold just sits there and looks at you, so does silver. It's not paying any interest. And
as government debt escalates and fiscal policies remain unsustainable, gold solidifies its position as a preferred hedge against economic instability. While mining stocks have seen impressive gains, their future trajectory remains tied to gold's performance, which could face short-term fluctuations. Meanwhile, concerns over market manipulation and reliance on paper contracts highlight potential vulnerabilities in the bullion trade. With central banks accumulating reserves and investors seeking financial security, will gold maintain its upward momentum amid fiscal uncertainty, or are further corrections on the horizon? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.